Hi, welcome again to another edition of Market Analysis for today, January the 27th of 2025. I'm Gio Benacourt. This is a recording about 2 hours prior to the U.S. session open. All right, so let's take a look at the markets. Today we are starting the week with a strong parabolic move to the downside across the board on different assets on all of the indices. So we closed on the red on Friday, and we are opening with a gap down today and a strong retracement indeed, because in just one move we've retraced 1, 2, 3, 4, 5, basically 6. So we retrace 1, 2, 3, 4, 5, 6 candles in one moment. And we're not even in the U.S. session open yet. This is all Asian and London session fluctuation. So therefore, either this will be absorbed by those supporters, those buyers that were around here, or once the U.S. session opens up, there will be most likely a lot of stops that have been taken out. And so when the market opens up in the U.S., will those positions continue to pull the market lower with it? We have spoken about that of a high for a correction to be applied, you can always expect a correction, and that's what will be happening right now. It would be about the 10%. So that would be 20,180. So we're not even close to that 10% retracement of that high. So if we are to continue into a correction, so 20,180 will be right below, obviously, 20,200. So let's see if that's where we are heading for this week, to do a correction. So that's a strong movement to the downside. What set that off? Gap down, stops being taken out, and continue that sell-off. So now that's just from the London session, obviously. Here we have the S&P 500, also a very strong gap down after last week, closing record highs again. And from that high is making that such a strong move to the downside. So initially, let's use that 50-day moving average as our level of support, and then 59.20 as our second one. Okay, then let's use 61.20. We're gonna use 59.20 as support and 61.20 as resistance, and then we're gonna use that all-time high. So we open up also in the red. We close on the red on Friday, and today we open the gap down, and we are strongly moving back downwards. So all of the indices are doing the same. So that will imply that a continuation of this move will most likely happen. So let's just use this 44,000 just because it's a round number, which is where it actually rebounded off for the Dow. So let's keep that in mind. And look, even the Russell is also open with a gap down. It's not such a strong fluctuation to the downside, but still. Let's take a look at crude oil. So crude oil is hanging in there, $74. You see how this strong volume cluster has absorbed that movement. So let's just use the lower, that swing low today. Let's just leave that there. I think that should be good enough. But you know what? I'm gonna use a 50-day as a second one, and just give some room. So I'm gonna use this level around here, and then if the same levels right here. So Will we have another attempt at trading below 74 and close to 74, below 74 today? Well, a Trump administration wants that crude oil down, so most likely that's where it's headed. So selling, we are entering a sell-off, most likely in across more assets, all of the assets. Look, gap down on Nat Gas. This is right here a really strong indication that this is most likely going to continue to the downside. So 380, the first level of resistance, which is halfway of that gap, and then that upper Bollinger Band. So they use that. Then they just use gold. Gold is looking to sustain itself from this volatility movement. Let's see if you'll be able to sustain itself north of 2700, or at least north of 2740. It retraced during the session, but it's looking to recuperate itself today. But let's see if we revisit that high right on Friday. Then we have silver. So we have here silver. Silver also, it opened with a gap down. It's kind of close open over here, obviously where it's at. This is a doji. They just use that. $31, that high, that swing high from last week, to that Bollinger Band. Copper, let's just lower that resistance, 430. Let's just leave that crossing of the Bollinger Bands as a level of support that it has done its job today. Let's take a look at Bitcoin. So Bitcoin also just plummeted below 100,000 after staying above it for quite some time, almost 2 weeks. But it picked its head below that level. So let's just use another levels for it, because it does swing with notions. All right, so let's just leave that there. 106,000. First level, 108,000 or second change, and the currencies are looking stronger, looking to recuperate. Let's see if that would be the case. 104 for the euro support, and that 20-day moving average is a level of resistance. Pound is looking mighty strong, so let's use that swing. And then the 50-day moving average as our probable level of support, 20-day moving average, the first level, and let's just use this over here as a probable level where it should find some support. And the dollar index is tanking, so the 50-day moving average as a first level of support, and then just that swing high from last Friday. All right, so as it moves lower, we should see obviously the currencies moving higher and metals moving higher. So that's it for today. Keep your eyes peeled, and most likely we're gonna be seeing some red throughout the day. We do have a lot of things happening. Obviously, also reporting, a lot of companies reporting this week, so that could also be helping the indices. We have also on Wednesday the Fed speaking. We also have PCE coming out on Friday, I think it is. So it's going to be a busy week. So keep your eyes peeled and your positions saved. Have a nice trading day. See you tomorrow.